Hello, everyone. Welcome back to the RationalInvestor.com's data brief. Woohoo, party. We're in the process of trying to find our wallet in El Segundo because I think I left it there. I got to go back and get it. Anyway. Good morning, everyone. Happy, what day is today? Wednesday, hump day. 15th of February. So we're already halfway through this month, eh? February goes by awfully quick. From what I understand, there's supposed to be some great big 1 year anniversary of you know who over there in Eastern Europe causing you know what. Coming up here shortly. I have no idea how all this is going to play out. Does anybody know? Oh, just crazy. So get ready. From what I understand, there's going to be some fireworks going forward here. I suppose you could argue there's some fireworks in the market. We did have a pretty important sort of U.S. government meeting about crypto yesterday. And Mr. Lee, I think his name, I don't know what his first name was. I think his last name was Lee.
Yeah, Lee Reiners.
Hey, there you go. Thank you, Zug. Man, that guy's not a spokesman for crypto. I don't know whether you watched that hearing yesterday, but he was a bit of a challenge. I did find it interesting. We, of course, at TRI, we keep a close eye on all this stuff very closely. And gee whiz, look who popped back up in the background of the videos again. How did he sneak his way in here? And this guy, of course, still bored as always. I thought it was hilarious watching this guy here. I mean, like literally the whole damn meeting. He's like, I have far better places to be. But anyway, I thought this lady, I mean, she did her job. And if anything, I kind of liked her balanced approach to sort of the calls for regulation. The US government, I'm sure, is well aware of this. If you sit and squash crypto here in USA, crypto is just going to go overseas, and all of this technology is just going to leave the United States behind. And of course, they don't want to be perceived being behind the curve. So the gentleman just to her right, I guess, on camera to her left, he was over here, and he was just an outright jerk. And then the lady to the other side of her. And it's very typical university professor kind of talk. A lot of sort of rhetoric. And, of course, you can always tell that this is so kind of, it's almost like theatrics. Every single question that the senators ask, they say, oh, well, thank you very much for that really important and very significant question. Every single one. It's sort of like they're all kissing each other's butts and stuff. Frankly speaking, I don't think I really heard too much actually coming out of this meeting. And I also heard through the meeting, they made references to the fact that Mr. Gensler, whatever the hell his name is, Mr. SEC, he's supposed to testify in front of this same committee like a year from now. So there's not really, this is the very initial stages of this committee and any sort of major decision making that they're going to do or legislation or anything like this. And so as a result, I think what really happened here was this just simply turned into a sell the rumor, and then right on the other side of it, buy the news. That's the way that I'm interpreting this event. One thing I will absolutely say, and I got to say, man, it's just, I literally could not build a better sales pitch for the algorithm that I spent my whole career working on and building the other day. Oh, that's always good. And of course, Alan, of course, he doesn't like my rhetoric here, so he'll try and undermine everything that I do here on this platform. But the other day we had just the most beautiful, I mean, this is in essence exactly what you want to see if you're thinking about investing in a market. And it's so ironic because it's completely counterintuitive to what you would think is you actually, if you're ever thinking about buying an asset in the marketplace, you want to come in when everybody is down and everybody is negative and everybody is selling, and it's like this stuff is shit, it's garbage, it's all going to zero. That's ironically enough when you actually want to consider stepping in on the long side. And it's fascinating how quickly this thing can turn around. So we load up the breadth indicator today, and you can see, look at these W's, holy for holies. And look how the fast has just jumped violently higher here on the crypto top 30. Just the most beautiful signal. And then on top of that fact, I mean, look at all the darn sixes we've got on here. I actually had somebody send me, because I was bitching yesterday that I wanted this shib off of the screen. Somebody actually sent me a screenshot and had gotten rid of this shib. So thank you, Nicolakis. Nicolakis. Am I pronouncing that right? Or do I just call you Nick? I don't know. Anyway, he was trying to help me out yesterday. Anyway, the point of the matter here is, and I'm sure I went on at length with all of you guys. You don't get sixes on this screener every day. In fact, a year or two ago when we were doing this thing was all ones and twos, which is major warning sign. Be careful, you're going to get your head handed to you. So the fact that we're all just parked with fives and sixes here, this is an extremely attractive market to be investing in. And as I said there a second ago, the irony of all of this is that this is when you actually have to get all your act together and have all your plans together and get ready and get loaded up for the next bull. And the weird thing with this silly market is, and I'm kind of going off, actually, you know what? I'm going to leave the rhetoric at that for now. What I'm just going to simply say is we had just the most beautiful buy signal there come in, just following the plan. I went and bought, and of course, I'm feeling pretty good about that trade right now. What I'm supposed to be doing here in this market summary, what's going on in the world and why. Right. Okay, here we go. So market overview, stock market, broader market, still wishy-washy. This is not the kind of environment that I would pound the table. You've got to load up. If anything, this is meh. You go and spend your money in the market. Okay, fine. It might go up, it might go down. It's certainly, this image in this stock market is nothing like what we just saw at a crypto. And this is what you want to see when you're like, holy crap, that's a signal. And the irony of it all is that I did this tweet the other day on the heels of this tweet. This is when you wanted to get all bullish and rah, get in there, orgy, face rip, buy the stock market. And of course, the stock market's gone zooming higher. So right now we're in a it's in fact the actual broader S&P 500 is, to my opinion, it's actually pointing down right now. And then if we head on down to the actual readings from our overbought, oversold, there's the stock market kind of neutral in the short term, a little bit uppy in the medium term, and then country funds kind of meh. So this is a meh market. Wouldn't necessarily say it's a technical buy, wouldn't necessarily say it's a technical short. It's meh. And interestingly enough, Jerry recently, of course, his speeches have been to the effect that it looks like we've got commodity prices under control. But remember, commodity prices are insanely volatile, and frankly speaking, I wouldn't attribute commodity price controls to any bankster. They really have more to do with sort of, you see what's happening in Eastern Europe, right? And everybody worried about the wheat crop, and all of a sudden wheat prices go crazy. And then, Vladdy cutting off the spigots there in Eastern Europe with energy prices go crazy. So a lot of commodity price pressure has nothing to do with bank policy, and interest rates has more to do with just raw supply and demand in the marketplace. Having said that, he has specifically said that there's sort of three phases that he's worried about. Number one, price pressures. The cost push, demand pull sort of side of the equation. He figures that the cost push part of the equation has sort of gotten under control. The problem here is the demand pull. And unfortunately, this is 2/3 the equation of inflation. And the data coming out today, of course, news-wise, Econs retail sales are still going crazy. And remember, this was one of the major drivers of this whole inflationary surge when Mr. Druckenmiller, if you're a fan of Mr. Druckenmiller, which I am, I think probably Stanley would do a better job running the central bank than Jerry. To be, mind you, I'm sure Stan probably doesn't want the job because it's a thankless bureaucratic nightmare black hole to head into. But nonetheless, some people like that kind of life. Anyway, point of the matter here is Stanley repeatedly warned retail sales way too strong. And we had made a reference, I think it was yesterday or maybe it was over the weekend, how the Johnson Red Book was starting to show that things were starting to sort of calm down in the retail sector. But with this, jump 3%, 3% isn't the end of the world. But the market was looking for that consumer as sort of the next piece of the puzzle in the inflation equation to start calming down. And the consumer ain't doing any calming down. So there is that retail sales number came in quite a bit higher than expectations. And unfortunately, if you're a Fed watcher, I think I talked a little bit about this. I might have done this in the after show. I can't remember. But we shouldn't really be thinking about a pivot in short-term interest rates for at least a good 6 months or so. And as long as these kind of data prints are still coming out, I think the propensity for the Fed to continue raising rates is still on the table. So we'll see how that goes. Interesting things like New York Empire State Manufacturing Index, was looking like it was going to be an absolute train wreck. So it actually, it's still printing a negative number, but it's not nearly as bad as what people were expecting. Is this weather related? Of course, remember a month or two ago, we lost Buffalo. So maybe things are a little bit better there just because the weather's a little bit better. From what I understand, East Coast is enjoying a relatively warm winter this year, which of course is probably going to fuel the more of the Greta talks and all that kind of stuff. But anyway, and then, year over year retail sales still 6.4%. So yes, we had a relatively friendly Johnson Red Book report. I think it was yesterday, but we don't have that on the screen here. But the raw retail sales coming out here today still very hot. So as a result, I don't think the stock market is overly happy right now. Let's see, S&P, Dow's even got a little bit of a double top working. NASDAQ, tech stocks still seem to be strong. And you can see crypto as sort of a I think crypto and tech actually are going to move sort of in conjunction now. And I wouldn't even be surprised if sort of Ethereum and the whole POS build out, blockchain becomes, I wouldn't even be surprised if by the end of this growth cycle, you actually have blockchain as a subsector of the NASDAQ 100, and all the blockchain related companies and services actually are like a sub-index. And, just like we have like communication services as a sub-index of technology space, I wouldn't be surprised if blockchain becomes a sub-index going forward. Having said that, of course, with that stronger retail sales number, you can see that the bond market's not very happy. And also too, if I'm not mistaken, interesting, we could probably follow the US dollar index as a sort of proxy on whether the Fed's going to continue raising rates. So you can see the US dollar index itself catching a huge bid, probably on the anticipation that the Fed has to continue raising rates. Also, too, recently on the dashboard, and this, I think we did this like on a Monday show, just sort of review the dashboard. We have very, very bullish readings coming out of, where's the best place to show this? Coming out of the Japanese stock market. The number one ETF in our universe right now is the Japanese, basically the equity index, Japanese hedged equity fund. And look at that thing just surging here. You got big ABCDs probably taking it way up top here. And then you got this little ABCD taking it up top here. Very, very strong. Why? And I think the reason why is because look at what's actually really, really weak. Actually, oh, isn't that interesting? It fell off the leaderboard. but the Japanese yen actually was being reported on our leaderboard as one of the absolute worst performing ETFs. And here is the Japanese yen, the futures contracts. I mean, this thing looks like a train wreck. And of course, weaker Japanese yen means profit margins for Toyota, Honda, Sony, Mitsubishi, you name it, all the big Japanese conglomerates and multinationals. Their profits that they're going to be reporting in yen, if the yen's falling and they're selling lots of stuff in the US market, those profits are going to be increasing. So, ironically enough, the Japanese multinationals love this rolling top in the end. This is music to their ears. So fascinating to see that. And more also too, seeing that the dashboard is validating what we're seeing in the currency markets with the Japanese stock market. So interesting market state that we're in. Having fun buying and selling, day trading, all that kind of fun stuff. But, if we just look at sort of the bigger picture, you can see I got a stink bid working here right now. We'll get rid of that. Big picture. Actually, it was interesting. Chris and I were sort of mulling over Mr. Mr. Barry came out recently and said, sell everything, sell it all, sell it all. So I don't know. I mean, I got to say, it's a mixed message. It's not a message that the market is egregiously overbought, because, that would mean that we're up at the top end of the range. And you can see this market's still got some room to go to the upside. It also doesn't really mean that it's really that great of a buy because, higher highs and higher lows defines a bull market, while lower highs and lower lows actually defines a bear market. So what the hell are we doing here? We also got recently a moving average cross. Whenever I have these moving average cross, especially with the W in the moving average, you're kind of like, it's, this game of investing and trading, it's really all about probabilities. And really, this kind of market right here, it can break either way. You got a coin in your pocket, maybe a Bitcoin, we'll flip a coin, heads you win, tails I lose, whatever. Point here is, I think this market could go either way here. And this isn't really a great place to place a bet, in my opinion. I suppose if this is a bear, we probably would like to see some, start with an inside bar failure, then maybe start carving out M's, those kind of things. But the fact that they broke this high here recently means they probably did go after some stops. And I just get the impression that we're stuck in a trading range here right now. And I would, simplicity's sake, I'd say there's the top end of your range. There's a big old gap that should be filled in up top. And I don't know, there's the bottom end of your range. And literally there's our playground. We could go back and forth here, no problem. If anything, this is why, it's so difficult for the talking heads to really give the public good information on a daily basis, is because the public wants to know, should I buy? Should I sell? What should I do? And really talking heads, they're not allowed to go, I don't know, this market's going to do any old damn thing it wants. This isn't really a good trade location. But this is why, if anything, this is why what we do, and if we can leverage things like the breadth indicator, is what we want to do is we want to hunt in markets that actually are buys. They're at the bottom end of the ranges. The markets are turning up. And, ironically enough, the only place that I really see that right now is in crypto. I think I would like to actually get the technology 100 index in our weekly commodity trend survey, because I got a funny feeling that, kind of like crypto, because keep in mind, crypto is very sort of technology and it's sort of in there. Notice when we scroll down to things like the Dow Industrials, you see that actually some of the tech names like Salesforce.com is doing that. I got a feeling if we had like a list of tech 100 on our weekly commodity trend survey, we'd probably see a bunch of fives, maybe even some sixes in some of the tech stocks. So that's going to be something I want to work towards adding to this weekly commodity trend survey going forward. So, maybe in the after show today, Wednesdays, I don't know whether we want to do guest hosts every Wednesday and Friday. We're kind of running out of guest hosts. But Eddie actually said that he might come on and talk to us a little bit about the little old lady plan, little old French lady plan, a little old French lady canasta club plan. I don't know what the hell we're calling it, but we'll come up with a name for it. And I got to tell you, man, in crypto, woo wee, this is hot, hot, hot. And if anything, this is why you don't want to get into the business of predicting the future. I heard somebody online say we have a weekly golden death cross. Wait a minute. Number one, I don't think there is such a thing as a weekly death cross. I actually don't think that exists. So people who have sort of relatively new to technical analysis world are sort of making stuff up as they're going along here. But what the hell? I mean, maybe we'll have something like a weekly death cross. I don't think that signal is actually doing very well. Like I said, the breadth indicator actually spat up a buy signal there in crypto. And I got to tell you, man, a lot of these little cryptos, they look like they're just getting ready to go crazy. I don't know whether you heard, but Zug, one of our site OGs here, he's been spoon feeding us some of his ideas. And this is just yet another one of his ideas. Look at this damn thing. Jesus H. Christ. Like, what the fuck? This is crazy. So, what's the definition of a bull market? Higher highs and higher lows. Okay, there you go. Merry Christmas. I mean, I don't know what the hell's going on here. Thank heavens. Zug told me you probably ought to pay attention to this. If anything, maybe we got to get you, Zug, on the Friday call, and you can tell us the fundamentals of these ideas. Because, this is a name Zug got me in down here. And of course, you saw how it performed. And I don't think this is done by a long shot. I wouldn't mind this actually pulling back into reload zones to rebuy. But this is his latest one. And look at that thing. It just doesn't have any quit. And if anything, I don't want to get in front of this thing. I just want to let it do its thing. And then once it starts to peter out and lose inertia and momentum, well, then maybe I'll start spoon feeding. I suppose in the short term, 2.618. So I guess that would make sense. But I mean, look at where this thing's come from. Could we easily get a test of these highs here? Sure, no problem. You can see it looks like there's a price gap right over here. It's incredible how when you look at price charts and you go, there's a funny looking gap. And, we all know that 91% of the time gaps should be filled in. And then you do things like Foggenbaums and you go, well, yeah, it looks like there's going to be a fight up top here. So anyway, I mean, I'm not going to complain. We're making money from trading. So that's the whole point of this exercise. But man, this crypto market looks HOT, 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 hot. The only thing that I'm concerned about, of course, is that relatively new people to the investing world are going to come in and buy that there. And kind of like what you saw on Zug's other idea. If you had come in and bought up here, you'd be like, uh-oh, what the hell have I done? Maybe that wasn't such a good idea. So what we're really trying to do, and actually this one might even be a good example, although no, its bottom's down there. Here's another one. I don't know. This is Cole's idea, but I mean, it just goes to show we're not here to reinvent the wheel. Hopefully what you see is just reoccurring themes over and over and over. Markets are down at the bottom end of the ranges. If you want to change this to the weekly chart to see that weekly commodity trend survey guy, as soon as you start getting, markets at the bottom ends of ranges, and then you start getting moving average crosses, and then you start getting W's in prices. Well, I mean, this is a trader's wet dream. I mean, this is basically what we look for. And I think I've said this to you at least a few times. Please hear me, people. You don't see this every day. This is very rare, where you get so many names that are all down at the bottom end of their ranges, and they're just waiting for those moving average crosses to start spitting up reasons to get in. Take a screenshot of this, and 2 years from now, come back and look at this. I guarantee you the market is not going to look like this. So I don't know if you have yours together. I sure hope you do. Opportunity is now here. It's remarkable. They're everywhere. So, and of course, this makes perfect sense because is the public interested? when you go on social media, do you hear the public barking about crypto right now? No. If anything, they're still licking their wounds from the Celsiuses and the FTXs and all that, and they're probably missing the opportunity to get in at the bottom of these damn markets for the next run go. So there's your summary. Broader market, I'm not overly impressed. Crypto and tech, probably to a certain degree. Tech probably is going to be weighed down, like big tech, by like the Googles and the Facebooks and all that kind of stuff. Crypto just looks like it's just rocking and rolling. If anything, look at, there's the total. Hey, look at that damn thing go. So this is the whole market. If anything, we do a Wednesday show. So we should probably have a fun conversation with Paul and Ben this evening. And FYI, I think I've told you this before, but anybody who's been watching this channel for a while, we used to have in fact, actually, if you come on the library, you can watch them from years gone by. We used to do a show called Bitcoin and Altcoin Trading Talk. And actually, they even put together pages for tutorials and stuff on Coinigy. Actually, where is it? There it is, BATT. So there's good old Alex Sturck from Ubik. I wonder if those guys are still alive. There's Will. There's Brian. Geez, looking all young and chipper as an old apartment I was in years ago. And there's Will. So the point being that we're going to try and get this show up and running again. So look forward to that. And also I'm going to be working on updating the tutorials that I did for these guys years ago. So lots to look forward to. I think, this we are in the basing year for crypto. So if you are a crypto fan, let's rock and roll. I don't think there's a reason to chase. I will say that I think we got a hell of a buy signal there on Bitcoin and really the broader crypto market the other day. But just remember, don't chase. You're not allowed to chase. Ebb and flow, back and forth, slow and steady wins the race. I don't know whether there's a hell of a lot more for me to bark about here today. I think I'm probably just going to leave it at that. That was a good half hour. So hope you got some edutainment out of all that. I think you've kind of missed the buy signal there on the corn. If anything, maybe let things settle down again. Actually, and just probably just to finish off, I actually, on top of the fact that we had the algo spit out a signal there the other day, what I thought was fascinating. This would be a good. It might even be a good little short. Algo tells it, and the trading plan that I'm running this particular term is I wanted to sort of highlight the algo on the site. Obviously, we've invested a lot of money and time into this project. So that's the trading plan that I'm working on in earnest this particular quarter for demonstration purposes. But the other day I put out a message, and I think the tweet was just levels. We had a ton of levels that price came into. We had trend lines, we had parking garages, we had reload zones, we had Foggenbaums that were actually just missed. And actually, maybe we even tagged Foggenbaum the other day with that low there. We had, moving averages that needed to be traded back to. In fact, actually, I think if we go 200. Yeah. Oh, no, that's different. Oh, maybe it was off like the 4 hour. Yeah, there. Yeah. Okay. So there's the 4 hour moving average. There was a lot of reasons, and bearish A, B, C, Ds. There, and I was debating whether this was a head and shoulders top. I don't know whether it is or not. I suppose if it is still technically a head and shoulders top, we would like to see that high taken out to negate that. And a nice bump up here. And like I said, the algo gave us a nice little signal off of there. I think there were a lot of reasons to think of this as sort of like sell the rumor, buy the news scenario. Nobody really sort of knew what was going to come out of this Senate. I mean, maybe the senators were all going to crap on crypto and the whole thing's going to zero. Remember that Lee guy? Woo-wee, was he ever a crypto bear? Doesn't look like the market interpreted it that way. Market looks like it interpreted like, oh, we were worried. Market was egregiously oversold heading into the worry, and it was sort of like a, phew, okay, well, there's no disaster there. So now the question ultimately is, can we consolidate these recent gains, something like that, and can we create like maybe like a bot setup going forward, right? So we want to see at least 33, but no more than 66, then start painting some higher lows, and then we can look for trend continuation trades to take us up through the top. We're also going to need this kind of consolidation here because we've got this downtrend line that we're working with. And of course, at TRI, we have a rule. You can't take that trade on a trend line break. What we really need to see here to validate that this trend line has been broken is we got to see some sort of bullish market structure on the other side of this trend line. So me personally, I'm looking for price to calm down here a little bit. If we do get that calming down, we get a nice consolidation, we can think trend continuation trades going forward. But for now, like I said, I did buy down in here based off the algo. And as long as the algo is pointing up, I really don't have any reason to touch that long. The question here is, do I hunt more long setups to add to that trade going forward? And right now, I'm just in sort of cool your jets mode. Okay. I think that's your summary here for today. Like I said, I've said it repeatedly here. Stock market, I'm just not overly impressed. I don't see a heck of a lot to get excited about. Crypto market, feeling pretty good. Am long and enjoying the ride. All right. Have yourselves a great day. PMA for the win. All the best. Bye.